All right, today is Tuesday, February 3rd. Another week, another a lot of moving parts and markets. Um, Julian, my old friend Julien Garran, good to see you. How are you?
Yeah, I'm good. I'm good. Good to meet you, George.
Excellent, excellent. You're over in London, here in the New York City area. Julian, why are you wearing a coat in your office? What is going on?
It's cold here in London. Maybe not as cold as it is in New York, but I thought I'd channel a bit of the Jensen. And I've only got one leather jacket. He's got about
Well,
2,000.
as your fashion consultant, I think you gotta get a black one.
Oh,
The
yeah,
black,
okay,
the
brown
black is
snapper.
better. Okay, so I'm gonna
Okay.
retaliate, return the favor. All right. So, given that conjures up a lot of references to .com, I thought um, I'd have my Enron field cap on, and I
That's
don't
cool.
know. I hope you poured
And you're
yourself
off.
a nice glass of tea, Julian.
Right. So did they give you the cap for buying so many shares?
Hey, Julian, I owe you some. I owe you some swag as a result of coming on. I want to be like the kids. Oh, here you go. Here you go. This was the cap given out. People can see this. This is the cap for opening day of
Oh,
Enron
yeah.
Field. Okay, it's now
Oh,
called. I don't know
fantastic.
if it's Tropicana Field or whatever it is. Anyway,
Yeah, yeah, yeah,
if
yeah,
it's too
yeah.
distracting, I'll stop. But I'm going to wear this for the interview, I think. All
That's all
right,
right. No, I can see it. Yeah.
there we
Okay.
go. There we go. All right. So, Julian, we're here to. We can talk about many things, but we're here first and foremost to talk about AI and what's going on with technology.
Yeah.
In the town square, that's been top of mind for most folks. Much has been written. The finances, the circular vendor financing thing has been called into question. The return on investment, the trillions that need to be raised with no apparent payoff. And so this has become the dominant narrative in the market. And let's be honest, in the U.S. market anyway, the S&P is 30 some odd percent technology. You've written extensively on the topic. Many have tried to compare it to .com. Some say, well, it's worse than .com. It's better than .com. I read something from you a couple months ago where you were saying it's far worse than .com. And I don't want to steal your thunder, but I recall something on the order of like the capital destruction is like a misallocation of capital is like 17x what it was in .com. So they came here to hear you, not me. I just wanted to set the table and let you have at it. And I know you've got some slides, so go for it. Go for it, Julian. AI, the floor is yours.
Yeah, no, sure thing. Okay, so well, the first thing is the way that we look at the economy. It's all about allocating capital. It's all about growing your capital stock. And so, if you do something that destroys capital and you do it for a long time, then you're going to get into trouble. And we use something called a Wixel spread. Using a Wixel spread tells us that the misallocation cap of capital today is 17 times bigger than it was during the dot-com crisis. Now, that's just one way of looking at it. I think it's like a deep fundamental way.
17 times.
17 times, yeah.
So this
So,
is not just some idle little financial accident. I mean, this is really has serious macroeconomic implications for the economy writ large, no?
yeah, this is going to be extremely hard to get out of. When
Okay.
this starts going wrong, it's going to be very hard to get out of. And that's part of the implication of this. This isn't just bad news for the AI investors and the AI companies. This is going to require huge macro intervention with kind of likely much lower rates, QE, and a rise of commodities and a fall of the dollar, and potentially the rise of India. But sticking to the AI part first. We're basically kind of open. I estimate the AI kind of GDP impact at about 3% of GDP. So the data center build out's 1.5, the Nvidia wealth effect's 1.5. If this just stops expanding, it takes 3% off GDP. If it starts to go in the other direction, it takes off six. That's a very
Whoa,
serious risk.
whoa,
Yeah,
those are
and,
huge
and we're
numbers.
talking, and at the moment, it's making up for the down part of the K-shaped economy, where you've got all the cyclical sectors are under real pressure because bond yields aren't coming down because of the deficit spending. So yeah, we can see it.
Sorry,
Yeah,
sorry.
bond yields aren't coming down
Right.
because of
This
the deficit.
episode brought to you by Enron and Arthur Anderson. All right, keep
Yes,
going.
yeah, excellent. So this is huge, and basically, bottom line, it has to work. The companies have turned themselves from 4 years ago being capital light and cash rich to today being capital heavy, and especially Nvidia. Blackwell heavy and debt heavy, this has to work. And I guess my argument is in two specific ways it's not going to work. The first way is because it was built to fail. Um,
It
so there are
was
things,
wait, hold it was built to fail. Okay, go on, explain
yeah,
that. That's pretty catchy. Go
built to
on.
fail.
Yeah.
Yeah, I'll explain that in a minute. And then the second thing is because it was built to fail, no one apart from Nvidia is making any money. In fact, they're making such large losses that they're going to need to draw more and more on the capital that's available, the private capital and the public capital that's available out there to stop a crash. And the problem is the public markets at the very least, and it looks like the private markets as well, they're getting more and more discerning about what they want to buy into. They might be buying into Google a little in the kind of equity markets because it's actually making some money from its Google summaries in search, but they're certainly not buying into Oracle, the data center builder now. They're not buying into Blue Owl, whose shares are down 40%. They're a funder of data centers, and they're not buying into Fermi, which is a data center REIT, which is down 60% since it launched. So those are the two problems. Number one is it's never going to work that well. You can't create a significant moat to make enough money in it to pay the costs. And number two is when the funding gets tough, then all of this stuff about circular financing, the huge amounts of vendor financing that Nvidia does, that starts to be a real liability to them, just like it was to Cisco in 2000. And kind of for people who are really trying to work out when the dot-com kind of slowdown was going to turn into a bust, watching Cisco's receivables was a great one. Now, I'll and likewise, you can watch kind of you can watch Nvidia's kind of receivables, which are up about 770% over the course of the
Seven
last
hundred and 770%.
over the course of the past over the past 33 months.
Whoa.
So Cisco's were up like something like 140, roughly.
So Julian, we want to keep this a family-oriented program, but it kind of reminds me of the line, well, Julian, my receivables are bigger than yours.
Yeah, yeah. Well, their receivables are bigger than anyone's. So in history,
So Jensen's got a big pair of receivables. I got it. All right, go on.
yeah. Okay, so the first question is why was it built to fail? What did they do to this thing to mean that it only has narrow commercial applications? I've got a rule of thumb that is if you use a large language model AI to build an app or a product or a service, it won't be commercial. Now, maybe to get into why that is, I thought I'd give an example of a mistake that it commonly makes. So I Googled Pascal's triangle. I was talking about this happened by accident. I was just looking at how the costs scale, and this was a good example. This mathematically is why the costs scale. And that chart on the left or picture on the left, that's an accurate Google picture of Pascal's triangle. And then I asked my Gemini AI, which I use because it's free with the Microsoft package. How do you construct Pascal's triangle? And it says, like, start with the top row, row zero, put a single one, next row, put two ones, next row, have a one at the start, a one at the end, and the interior numbers are adding up the ones above it. And that's, it's clunky, but it's correct. That's how you build it. Now, you'd have been forgiven for thinking, because it's correctly answered the question, how do you build Pascal's triangle, it can then do it when you ask it to do it. So I asked it, can you build Pascal's triangle down to the 15th row? And what we have on the right there is a complete catastrophe. It's got it totally.
What is that? That's not the
Well,
Leaning Tower of Pisa. What
yeah,
is
yeah,
that?
exactly. It's not a triangle, and it's not Pascal's triangle for certain. It's a total mess, right? So now the question is, why is that happening? Why can't it build it if it says how it works? The answer to that is what it's doing is it's just correlating answers with questions. So if this answer, how do you build Pascal's triangle, has come up enough times in its training set, it can answer it. But that's just word salad to it. It doesn't know what that means. And there's a book by Harry Frankfurt called On Bullshit, and he
On
defines
bullshit. Okay, got
On
it.
Bullshit. It's a good book. It's very small. It's like a
Oh, yeah.
pamphlet. And he says that bullshit is when someone answers a question but they don't care whether the answer is right or not. And this and this is kind of what this does. It'll answer the question. If it happens to have been trained on the question, it'll be able to regurgitate it. But if it's not been trained on the question, it's going to give you a random load of rubbish. Now, in this case, it could still answer the initial question, but it's never been trained to actually build Pascal's triangle, which is very different to answering the question. And then therefore it can't. And so what that comes down to is that there's several ways that these things go wrong. And that then manifests itself in that it's really bad at doing complicated things. So yes, you can answer a question, like regurgitate the answer to a question. But when you try and make it useful, like so OpenAI launched its agent called Operator last March. And the agent's meant to act as a sort of like a big CEO's kind of PA, and it can order you a pizza and get your groceries delivered and buy you tickets to the ball game and all that kind of stuff. And about 19 minutes into the presentation from Sam Altman and co, they showed how often it worked. And it was only working about 34% of the time. Well,
Wait,
that's not very good.
what percentage of the time, sorry?
34% of the time. And that was on their
34%.
own
Okay, yeah.
metrics. So they were setting their own homework
Right.
and they were marking their own homework. And still it was only 34%, which is a very long way from, you'd sack a PA who was doing that.
Sure.
But it's actually worse than that. So when you actually test it in the real world, and this is an academic paper called the Remote Labor Index by Mantas Mazeki et al. And what they did was they went and got Upwork, which is a remote kind of work website where
Yep.
you do work for companies who kind of put it up, and you get a rating how good you are, and the companies get a rating about how honest they are and paying you and all that kind of stuff. And the best, and so they eliminated kind of jobs where they had to build things which the AI clearly can't do, or where there was too much human interaction, like doing a kind of tutorial or something. And they tested it, and it was kind of jobs that had actually been done and been paid for on Upwork. So one was building a video game, one was making a presentation out of the rough notes that a person had. One of them was doing an architectural schematic for a building, for instance. That's the kind of thing. And they tested 6 major large language models, and the best one managed to do it well enough that the people who did the work and showed the work to the academics judged would have been paid for. The best one managed to do that 2.5% of the time.
What?
And
Wait, wait,
yeah, two and
wait.
a half
Two
percent.
and a half percent?
2.5, and that's the best one. The worst one's 0.3% of the time. Okay. And now the problem is like this is so Upwork's like Uber and it's
Julian, the dude with the fancy colored, multicolored coats that comes on TV, Dan Ives,
yeah.
he forgot to tell me about that. All right, keep going.
Okay. So yeah, so anyway, the because it's a trust-based system like Uber is, kind of if you were an Uber driver and you completed 2.5% of your drives, you'd be kicked off the site within a week. And so anything like this that's completing that low, it's going to be kicked off the site. So it might as well be zero, bottom line. So
Wow.
so why is this happening? And why is it really not that good at doing those types of things? And there's a number of problems. So the first thing is the way that it was built. So they wanted it to be eloquent in speaking. And so what they did was they gave a vector to every single word in the language, right? Now, a vector to you and me is like where we are in the world. In London here, I've got longitude, latitude, and height above sea level. You've got the same thing in New York. So 3 numbers in our vector. I subtract mine from yours, and we can work out exactly how far apart we are. So it's got
Great.
value, it's useful, but in a narrow way. Now, what ChatGPT 3 had, which is the last one we have this vector data for, was it had 12,440 numbers in its vector. And the point of them is to try and work out how words fit together. So, for instance, if you had the word cat and the word dog, they'd be in a similar part of the vector and quite close together because they're similar. They're pets and got 4 legs and tails and what have you. But then they'd be connected to another part of the vector which represents the word running, because they both do running. But the
Hmm.
cat is more likely to be seen running in the garden than the dog in the park, for instance. And that way, they can work out probabilistically what the most likely next word in a coherent sentence is. Now that worked. Once they worked out how to do that, that worked actually pretty well. It was capable and is capable of creating these coherent sentences, but it doesn't mean it understands them, and it doesn't mean it's always right. And one of the big issues is that it's based on correlation, but correlation isn't how the world works. And so, one kind of, what they're basically asking you to believe is that the correlations in their training set are going to persist in that training set in the future. They're going to exist in other data sets, and they're going to exist in the real world separate from the training set. And sometimes they will, and sometimes they won't. And the best example of this comes from a guy called Tyler Viglin, who used a training model similar to the one that OpenAI used to find spurious correlations. And so one he found was between 2000 and 2009, the amount of cheese eaten per capita in the United States was 94.7% correlated with the number of people who died by becoming entangled in their bed sheets. You or I know full well that that's spurious, right?
You think? Yeah.
And indeed, what then happened over the next 15 years was that the cheese consumption kept on going up with income, but the number of people being entangled in their bed sheets went down because duvets got more popular. And Hilton put in duvets rather than sheets and so on. And so it tells you that it doesn't always work. And so you've got distinct limits. Science is not based on correlation. Science is based on coming up with a theory about how the world works and testing it to death. And this is very different. Now, the second kind of problem that this has is that is the problem of scaling. So if you want it to get it a bit more accurate, you take the vector from 12,440 to 12,441, you'd hope for a linear 0.08% improvement in accuracy. You might get that, you might not, depends on whether the vector is useful beyond a certain point. We don't know. But what you are going to get, because you then have to recalibrate all vectors, all the numbers in every word vector across every single word in the entire language, you're going to get costs doing that. So theoretically, it should hit a scaling wall. So the question is, has it in real life? And the answer is that it has, because they spent about 50 million on ChatGPT 3 that came out November 22. They then spent 500 million on ChatGPT 4 that came out in March of 23. They then planned to spend 5 billion on 5, which was due to come out Q3 of 2023, but didn't. And kind of reports by The Information and Bloomberg, who'd spoke to insiders. The insiders were saying, look, it wasn't good enough to justify the 10 times increase in spend. So they kept on training it for another year and a half, 2 years, and then put out something that was completely underwhelming. Wasn't much better than anything else. So that shows you that they can't make it better, even with an enormous increase in the amount of spending. And they can't make it better from a point that it's not that useful. And the next point,
Julian, but I'm just thinking about the chatter that goes on in the public square and markets. But Moore's law. So, like, wait a second.
right.
You think we're hitting some constraints here?
Well, yeah, and technically, okay, so there's two important laws around this. One is Dennard scaling, which is that there was a halving of the amount of energy or electricity per computation. And it was halving every 18 months, along with Moore's law, except that stopped when the chips got so small, you got electron leakage. That stopped around 2005. And
Okay.
then you've got Moore's law itself, which was the halving of kind of the cost of buying the compute every 18 months. But that stopped around 2015. So if it hadn't stopped, you'd be able to buy the best new iPhone for about $120, and Apple would
Got
still
it.
be
Okay.
still
All
be
right. Got
making
it. Got it. Okay.
40%.
Got
And
it.
so
Okay.
because it hasn't stopped and this thing is going vertical, that just means that the compute costs get enormous on you very quickly, which is exactly what we're seeing with all these data centers, that cost millions or billions now to build. Now, the next issue is rote learning. So if you rote learn, this is my sort of equivalent to this is if you ask a 12-year-old kid, right, explain the inner workings of an atom, right? If one of them, and there's a couple of kids, and one of them knows atomic physics, and the other one has access to an encyclopedia, and they both come out with the right answer, does it matter? Well, it doesn't matter if your next question is explain why uranium-238 is radioactive, because they can, one would tell you and the other one would look it up in the encyclopedia. But if you ask the question, why is fermium radioactive? The kid who understands radioactivity and atomic physics would be able to tell you, but the one with the encyclopedia wouldn't, because that's not in the encyclopedia. So there's a real limit to this, and rote learning is not commercial. And you can, it's what's it useful for? It's useful for homework. Well, yeah, but the kids aren't going to spend through the moon on homework. I can't sell my homework from when I was at school. I can't, if I could get it to program an Atari game from the 80s, I wouldn't be able to sell that because they're already out there and likely copyright as well. And so they actually don't have, can have some uses as a tool, but they don't have a lot of use to make a tool that you can sell. And particularly the thing people are most into is this vibe coding stuff. Well, yeah, they can auto-complete your code, no question, and that can be useful for some people and help them complete their projects quicker. But what they can't do is make sure it fits with the rest of your coding stack, make sure that it's robust against hacking, make sure it's robust against bugs. And it may be a coincidence that Microsoft is producing 40% of its code kind of using kind of AI, according to Satya Nadella, and the fact that they've had all sorts of problems with their Microsoft 11 launch, which is freezing on people, failing to do things. I had a friend who'd just upgraded to 11 earlier this week, who's also a macro strategist. It wouldn't download Bloomberg data properly, which is like a key to the job. All of those types of things, you just go, I'm not sure that this works. Now, your next issue is you've got to do overlays. So you've got to do a safety overlay. So you can't ask, what household products could I put together so I can poison my neighbor. They have to stop, they have to stop that kind of thing. But the problem
Sorry,
is,
sorry, apology. Go on, go on.
but the problem is, if you tell them to stop that kind of thing, that interferes with the way that the neural net works, and consequently, it can start making really odd answers to other things that used to work. So there was a Professor Zhao at Stanford who tested ChatGPT on 8,000 different questions in both March of 23 and July of 23. And found that in March it could parse primes, i.e., work out if a 5-digit number was a prime number or not. And it could do that 95% of the time. But by July, it was doing it 70% of the time. So it was getting it wrong 3 times out of 10. And he was asked why, and he used the word for the day, neuropleiotropy. Right. So this comes from
Sorry, say what? Say what?
neuropleiotropy. So what that
Okay.
is in the study of the genome, um, there's a base pair that makes hair grow out of your ears, right? So this is a condition small number of people have, but it's like right out there, like a mushroom. It's like, but they know exactly where it is, and they can splice it out of an embryo. So to stop people having that problem. Now, the difficulty with this is that if you kind of change one base pair in a genome, it can completely change in a completely sort of unpredictable way the behavior of the other base pairs in the genome, so that using CRISPR to try and make yourself more intelligent is actually a really stupid idea, because something else is going to happen to you and you have no idea what it is. And this is what's happening with these models, is that the more overlays they put on them, the more things stop working elsewhere in the model for reasons they don't understand. Um, and I guess the final issue, this is now philosophical, literally philosophical, in that the final issue is how do you define an object? And for 2,000 years, since the Greek philosophers. They defined it by their characteristics. It's kind of smooth, so it's not rough. It's hard, so it's not soft. And you can kind of see how Greek systems of logic kind of stemmed from all of that. Um, but then Heidegger came along early in the last century and said, actually, you can define it in a totally different way. It's by how you use it. And that throws up all sorts of questions like, well, if you want to understand how you use an object, then you have to understand how society works, what people are capable of, what's needed. How useful it is depends on how much other people need the work you can do on it. So on and so forth. And that stuff is complete anathema to these things. They can't understand that at all. And so my question was, who do you trust? The guy on the left with the books, who's Judea Pearl, who's the author of The Book of Why, who has started a nascent science of causal programming, i.e., working out this causes that, and who understands that that is the most useful way of programming and, if you like, a part of an intelligence, but it's narrow because you can't have too many causal processes, otherwise they interfere with themselves and the program stops working. So he understands that. Or Sam Altman on the right, who is wont to walk around with a blue backpack. Now, what's in the blue backpack is a button that he can use to turn off ChatGPT if it becomes sentient and tries to take over the world, which is total bullshit. And so that's those are the reasons fundamentally why this is only going to have a narrow use. Yes, Google can use it to create an AI summary. It got in trouble for that because it wasn't accurate when answering healthcare questions. The Guardian, a paper in the UK, exposed that last month. It also got the maker of the plane that crashed in India last year wrong in its summary, for instance. But generally speaking, it can create summaries. And that helps it because that reduces the traffic to the original news site by 20%. So it scrapes the benefit of that off, but purely at the expense of the news websites.
So,
So
so,
yes,
so,
it's
so,
got
Julian,
that.
if I hear you correctly, I mean, so AI's best use case, it can save time. It can give people tools to do things maybe more quick,
Yeah.
efficient than they could before, but it's not good at. It can't do new things really. And so, you think the use cases for these large language models of AI are going to be considerably smaller than the bulls are estimating? Is that what you're saying?
Yeah, I think there's two elements to it. One is the use cases aren't that commercial. Homework is the biggest use case.
Hmm.
You can't sell homework. And what we see, kind of the reason that these companies will give you sort of an annualized revenue number is because they can only pick the period of time when the kids are doing their homework. If they actually told you what the revenue was during the holidays, it's a lot lower. It's a lot lower, right? So, and or the use is a lot lower. Okay. And then the next thing is, yeah, you have to be very, very narrow in what you do. So you can apply and create narrow AIs that are causally programmed that will do protein folding or that will do, play chess against you to a high standard. What you can't do is create a general AI because unless it's been trained on that exact question, it won't answer it. If they try and do overlays or rote learning, it's not going to be valuable. And so and yes, it can auto-complete a line while you're coding, but it can't write a robust commercial program on its own because it will not be compatible with the rest of your system. It will be at risk of hacking. It won't be robust. So you can use it, but only if you know what you're doing. And the more complicated it is, the more steps it has to undertake in order to try and do something, to do a task, the more likely it is to get that wrong. So
So
in that,
companies, yeah. So companies, I mean, I've read reports, you could tell me, but I mean, everyone's waiting for these use cases, but I've read stuff as well where every dollar company's spending using it, like they're losing $8 or whatever, and that'll presumably improve, but there's no, so forget about Microsoft and the hyperscale, forget about that. We're talking
yeah.
about use cases now. So the guys actually buying the AI using it, where's their ROI? And then to the bullseye, well, just wait, Julian, just wait. Like it's horribly loss making right now. And if I hear you correctly, you don't think it's going to get much better going forward, no?
That's right. And everywhere we look, apart from NVIDIA, is making catastrophic losses. And probably the place that's, the first place that's making the losses are these data centers themselves. We've already started to see the market get concerned about this because Oracle had announced the massive investment from OpenAI last September. Its shares jumped 30% on the announcement. Shares are now below where it was when it made the announcement. And building a data center is hard work. Ed Zitron has done some good work on this, just showing how expensive it is to build, what risks you're taking because people haven't really built them. One stack of Blackwell GPUs uses the same amount of power as about 619 houses, right? So cool.
What?
Yeah, yeah, no, seriously. So cooling that, because they have about 72 of the Blackwells in the stack, cooling that is right at the edge of our ability as an industrial society.
Julie, let me ask you a question.
Yeah,
I mean, you forgot more about this than I'll ever know. I've seen these things on X. I'm sure you've seen them. They show these videos and they do a panorama, a sweeping
yeah,
thing of the data centers, and they got like this really like horror film music or whatever. And it just goes on and on and on. We call them football fields. I think you call them pitches or
yeah,
whatever. But these
yeah.
things are just like massive. All right, and like why are we doing this to ourselves? It just is total insanity.
No, yeah, they are massive. It's an enormous punt by companies who are monopolies who've completely transformed themselves from something very attractive in that they were capital light and cash flow intensive to something much less attractive, which is owning a lot of those things and having a lot of debt. And the difficulty is that they're not easy to build. There were all sorts of delays to Blackwell because they were struggling to put the racks together that would cool them properly. There are all sorts of delays to data centers because they're struggling to get water and power. And we're now seeing public discontent as localities are complaining about them taking access. And you've got a lot of people building these things who don't have experience building them because this thing is not a kind of Bitcoin mining operation. This is a lot more power intense, a lot bigger, and a lot hotter in the whole process. So there are huge risks. And one of the things that's interesting in all this is that Satya Nadella has been signing kind of offtake agreements for compute. But what he's done, like with CoreWeave, with Lambda, etc., but what he's done is he's put unrealistic timeframes on delivery. Expecting, for instance, this delivery in the first half of kind of or the end of this year and first half of next year, when there's just very little chance that it's going to get delivered. And he then has the ability to walk away. But these data centers will be left with all their debt. And for instance, CoreWeave has about 25 billion of debt on 5.2 billion of revenue with a quarterly loss that's exceeding 100 million at the moment. So how it's going to pay back this debt, service the debt is going to be tough. Paying it back is going to be even tougher, especially if anyone cancels some compute offtake because they're finding that it's not useful. And I think even once they've built the thing, the question is, can they make any money? And I did some simple calculations, sort of basically saying, okay, so the chip, the Blackwells cost about 50,000. There's about another 25,000 putting them into the data center. How much do you have to rent them out for per hour to make a small profit, like a 10% return, annual return, given your cost of debt is going to be 10% plus? And I assumed a 3-year lifetime. I worked out it'd be about $6.31 an hour. Now it took until July last year to finally get a public price for renting one of these things because of all those cooling delays. And it came from Lambda, and this is the latest screenshot. They're charging 379, right? And if you take it for longer, 359, 349, sorry. And if you're a hyperscaler, I'm sure you can negotiate lower. Now, on that basis, they're going to be losing money hand over fist. Now, you could criticize my calculation because I've assumed 3 years, uh, because you might assume four, for instance, even though these things are run 24/7 and run hot. So actually, the chances are they're not going to last that long. But you could criticize it for that. But then my counter would be, well, if they're going to last for longer, NVIDIA has promised a new iteration of chips every kind of 12 months. So they're going to be disfavored. The price is going to go down. Nadella was complaining about not having enough warm racks, i.e., racks to run their current lot of chips. So when those come online, the price is going to go down. And so I think my assumptions are reasonable. They have flex both ways. If you think these things last longer, well, sure, but you have to rent them out, and yeah, the price is going to be lower in future. So when you look at that, you go, well, these things are built to fail. There's no way these guys don't get into trouble. And the only thing holding them up at the moment are a bunch of ridiculous kind of, offtake agreements that NVIDIA has kind of come up with.
Right,
So
right.
like they've said they'd backstop CoreWeave's kind of compute, which means if no one else wants it, NVIDIA will take it. Right. Well, what kind of company does that? Because if you've got a commercial use for compute, you rent it and you use it. You don't just say, "Oh, I'll take it if no one else does," and especially because they shut down their competitor to AWS. So what are they going to use it for? It's a big question. And then if you look at the trainers, the large language model trainers like Anthropic and OpenAI, well, that again, I mentioned that they're not being completely honest about their revenues. They're not being that honest about their costs either, but I estimate the costs are coming in 2.5 times their revenues. So they're not just loss making, they're scaling the losses as they grow, which is the opposite of a good business. And then, within 3 to 6 months of, say, OpenAI manages to train a better model, which is unlikely, but if they can, within 3 months, DeepSeek has kind of made something that's 90% as good that costs 10% to run. So what's the chance there's a real
Yeah.
moat there to make profit?
So a couple things, Julian. I mean, God, I
Yeah.
mean, we've been going at this for a while, but there's so much to
Yeah.
talk about. We have to do another one. So just a couple of last points you made there. So on the DeepSeek, it's kind of interesting. The Chinese are no fools, and it was January. It was it was a little over a year ago that the whole DeepSeek
Yeah.
thing happened, and it's kind of people forgotten about that. But could you speak a little bit what's going on? I mean, the Chinese are seeing fit to do this, as you rightly point out. At a fraction of the cost for something which is, I don't know, almost as good, whatever. So why is it the Chinese have worked out that the way we're doing it's not the right way to do it? And to me, it's just totally insane. You got Tech Bro from Sand Hill Road and in Menlo Park talking about how this is an existential threat. We have to do this. And David Sachs or whatever it was a couple months ago saying, "Oh, we need to have a bailout." Oh no, sorry, I didn't mean that. Okay. And then you look at what they're doing. Like, I kind of go with the Chinese on this one. So, could you just talk a little bit about juxtapose, compare and contrast the way the Chinese are doing it,
Yeah.
or the way the US guys are trying to do it?
Okay, so what you can do, it wasn't well understood early, but it was becoming increasingly well understood as we went through 2023, is that you can train models in different ways, right? So you can do the hard yards of training and do all those correlations for all of those vectors and get a lot of rote learning, which is paying people cents an hour in a distressed country to label pictures and videos and so on. And that way costs billions to try and make anything better than what exists today. But the other way you can train is you can get the model itself to create synthetic data for you. And if you do that, or alternatively, you can take an open source model and just put a front end on it, like a user interface on it. But if you train it using the synthetic data, then what ends up happening is it has less nodes, but they're almost as good as the original. So call it 90% as good as the original. But the thing is, because it has less nodes, the cost of running the thing is about 90% less than the cost of running these
Oh,
these beasts
oh,
that OpenAI are doing. And anyone can do this, right? So yes, the guys who are working as coders for DeepSeek are probably elite coders. But broadly speaking, this isn't an overly complicated thing for anyone who knows how these models work
wow.
to actually pull
Wow.
off. And so you have to ask, like, well, how's OpenAI actually going to maintain a moat and make a profit given how quick and easy it is to replicate what they're doing. There's reasons why a Porsche, the Porsche the company won't let you get into the engine, so that you can't copy the parts or make your own car using the parts or even fix the thing. The same thing's true of an iPod, but you can't create a moat with one of these models. It just doesn't work. Um,
So, Julian, sorry to interrupt, but just in the interest of time. So let's move on though to the fanciful world of equity markets.
sure.
As we know, um, it's the old Keynesian beauty contest. It's not who's the most beautiful girl, but who do you think the judge will deem to be the most beautiful girl? Or
Yeah.
to invoke one of George Soros's great concepts, aside from reflexivity, he talks about the way to make money in the market is figure out, try to determine what is it the market that believes that's false. But more
Yeah.
importantly, when are they going to realize that it's false when they've been had? Okay. So you and
Yeah.
I are old enough to remember when. We had the
Yeah.
dot-com insanity, and I
Yeah.
recall late '99, I went short too early, and my therapy bills went to the roof, and blah blah blah. But then, in March, from March on, I made it back in spades. So, as Louis Gave has brilliantly pointed out, on the way up in a bubble, companies are
Yeah.
rewarded for spending more money for misallocation of resources. So you can
Yeah.
watch the market reaction. The market will tell you. But then you get to a point, you cross the Rubicon where it flips over, and companies are no longer rewarded. In fact, they're penalized. In some cases, rewarded actually for disinvesting or canceling things. So
Yeah.
where are we at in that continuum right now?
Okay, so what's now happening? It feels like since last October, we're in a distribution phase. And so previously, all you had to do was say you were using AI or you're building an AI model or you're building a data center and your shares went through the roof. And
Right.
kind of the very peak of that was Oracle's announcement around 11th of September or so, when it said that OpenAI had made this huge investment in it. Now, what people started to work out was that Oracle was going to have to borrow a huge amount of money to put these data centers together, that they had substantial execution risk because they didn't necessarily know how to build them, that they were at risk from OpenAI reneging on the deal, and they were then at risk from making a loss once they'd actually opened the data centers. So as that started to happen, you started to see the shares fall, and they've fallen below where they were even at the beginning of the day, um, before they made that earnings announcement in September. So that's your first sign that we're starting to get some kind of discrimination taking place, that people are starting to worry. I think and that exact thing was going on. You referenced 2000 from March or so. You started seeing discrimination from around March, where people were going, some of these dot coms, are just going to hit the wall, but Cisco still looks solid. And so Cisco kind of did all right until about September, whereas some of the loss-making dot coms were getting increasingly carted. Um, and then Cisco had a problem, which was that because it had been vendor financing to those loss-making dot coms, and because the funding for those loss-making dot coms had dried up, Cisco suddenly had to start pulling its vendor financing, and that's when you
Mm-hmm.
started to see the physical decline. Now,
Mm-hmm.
so we're in the stage, that I mentioned Blue Owl, the data center funder, which is down 40%, and Fermi, the data center REIT, that's down 60%. We're starting to see that discrimination taking place. And my view is, it's going to take a little bit of time,
Yeah.
but at a certain point, that lack of funding is going to cause
Hey,
trouble.
Hey Julian, I don't know who wrote
Yeah.
it, but I got a good. You gotta have to find. I'll find if I give you the foot. The guy credit where it's due. So the phrase "the canary in the coal mine." Well, your next report. Someone wrote something. The owl in the coal mine. So
Oh, yeah, that works. I like that. The but yeah, and then the next kind of group are the front end people, the people making the apps, and
yeah.
these guys are all heavily loss making, but they're not just loss making. They're loss making using a product that's losing money for OpenAI and Anthropic. And so the big risk that they've got is if you're Perplexity who does the search, or you do a coding app that's not Anthropic's or OpenAI's, like Replit or whatever. If you do any of that, your risk is not only that you're losing money, but then that OpenAI and Anthropic can copy what you're doing, or one of the hyperscalers can copy what you're doing, and they have better distribution. And third, that OpenAI or Anthropic can raise the costs at you, which they did in July, which caused a lot of these kind of vibe coding businesses to see their revenues and usage drop off.
Julie, help me. Are some of these publicly traded companies? I don't know the stocks you're talking about, the companies you're talking about, or are these more
Yeah,
private
that
players?
yeah. Perplexity. I'm not. Oh, I'm not sure if it's publicly traded, but we sometimes get what's happening to their. We
All
know
right.
that they've been
Okay.
raising money
All
regularly.
right. Okay. So importantly,
Uh,
though, what I hear you, so you're very skeptical on the AI trade. I share your skepticism, but it's also true there's big winners and losers. So, for instance,
yeah,
Google's a winner, Microsoft a loser. So, are we going to see a? So, maybe Elon Musk thing is no good, and maybe
yeah.
Microsoft's one is no good, but conversely, Anthropic and Google are actually going to do reasonably okay. No.
Um, okay, it's probably best to go straight to the company
Yep.
that's done the best out of all of
Yep.
this, which is
Yep.
NVIDIA. And clearly, and one way of describing what they've been doing is that they've been providing the shovels for the gold rush of large language model AI. But the problem is there's no gold in them their hills. So
Bingo! Ding, 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 ding.
yeah, so if these guys can't make any money, at some point the trade of selling shovels to them is going to stop working. And
When
that's
the folks start coming back down from the hills and people say, "Where's all the gold?" They go, "Well, we couldn't
yeah,
find it. It's a
there's no
problem."
gold. And so yeah, we're just getting closer. And if we were still in a market where all the stocks were just going through the roof whenever they mentioned AI,
Sure.
then I'd say I don't know how soon this is going to stop. I know it will someday, but I don't know how soon. We're now in a more discerning market that's starting to get you more interested that it could be sooner rather than later.
Yeah. So usually the market's in a discount things. Usually you get valuation compression first before the
Yeah,
fundamentals blow up. And so, like
yeah.
I know AI, OpenAI, Scam Altman, as he's referred to, he's been running around
Yeah.
trying to raise more money. Do you have any particular insights on OpenAI?
Um, well, yeah, the problem, the information came out and said he probably needed to raise about 100 million, right? Sorry,
Billion, yeah.
100
Yeah,
billion. Sorry,
billion. Hey,
my order.
what's 100 billion between friends? Everett Dirksen, please call your office. Go on, yeah.
Yeah, yeah, get my orders of magnitude
Yeah.
right there too.
Yeah.
The Now you question who's going to provide that. Private equity and private credit are beginning to struggle. The information had, or kind of, a number of places have commented that their kind of dry powder is deteriorating, in part because they can't sell on the things they have already. A lot of the businesses in AI are very highly valued, so it's very difficult for them to raise more capital or to be listed. You have to go through the ringer of an S1 kind of form for which you're personally liable as the CEO, and which is a real problem if you fill it in badly. And so they have to raise an enormous amount of money. And you go, well, Mitsuyoshi-son at SoftBank was apparently crying when he had to sell his Nvidia shares to fund his OpenAI kind of commitments. So is he going to do that again? I don't think so. You can say, well, how about Saudi Arabia? But the problem is they've been cutting benefits because, they're not making, they've got a large domestic commitments and oil prices aren't that high. So it's quite politically difficult for them to just chuck money at this thing. And that kind of leaves the hyperscalers. And yes, there are comments that the hyperscalers are getting together and may fund him a little longer. We don't know yet. We'll have to see because NVIDIA said they were going to fund OpenAI, but then kind of Jensen has come out and said that it wasn't a commitment. It was just a thing he might do if he wants to. And so
I
slightly
would think you
different.
might say on a date on a
Yeah,
romantic,
yeah, yeah, that
like,
kind of
oh
commitment.
yeah,
Yeah, yeah, I'm definitely not married. The um,
yeah.
and then and yeah, and then you look at the majors, and again, it's the price action when you announce really big capex that is
hmm
kind of the key thing for them. And Meta was the one who probably went hardest at the capex build at the last results, and it's down.
Right.
So my concern there is that are you really going to want to do this as a CEO, or do you want to be a bit more careful, like Nadella
Right.
is now beginning to be, and make your purchase of compute more more cautious by basically, putting these ridiculous
So,
timelines in,
so, so zooming
letting.
out just a little bit. So okay, so OpenAI, okay, so they're troubled. So we don't want to be a producer of picks and shovels. So is it right to say therefore that NVIDIA is going to have some problems here at some point?
Yeah, I think so. Yeah, and if look, once you start seeing the funding dry up for Perplexity,
Yep.
it will never make any money.
All right. Okay, so
Because
NVIDIA no good. So then
yeah,
let's go down the rest of the ecosystem. So they
yeah,
have these other things. Maybe I don't know if you've looked at these Neocloud things. All
yeah.
right.
That's okay. So that was CoreWeave that I was talking about earlier, the data
Yeah,
center.
yeah. There's CoreWeave and
Yeah,
there's a whole bunch of little ones out there. There's
yeah, Lambda
Thaddeus
and
and Iron and
libraries.
Cipher. So someone great. This is brilliant. The other day in space, someone described these things. Ready for this? These 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 NeoCloud things. It's like WeWorks with GPUs.
Yeah, okay. That's good. Yeah, it is like that.
By the way, you
And
can use it. I got to put you in touch with nobody special because I think he coined that phrase. You got next time we do one of these, it should be the three of us together. But anyway,
it
I
should.
thought that was brilliant. So, would you agree with his sort of characterization of these business
Yeah,
models?
yeah, no, I agree with that. It's probably worse actually.
Oh, it's worse.
Well, because you can use an office. So,
Oh,
so, so
by the way, I've had to ask you. Well, answer that first. I got another question. Go ahead. So you're
okay,
saying these
yes,
NeoCloud guys are totally stuffed, no?
so I think everyone who's not making money already is in very difficult position. That's going to knock on to Nvidia. My view is that this is such a large problem now, i.e., just kind of ending it takes 3% off GDP, reversing it takes 3 to 6% off GDP, that it's going to become a political problem, that they're going to have to reflate to make sure that conditions aren't seriously worse by not by the midterms, but by the next election. And in order to do that, you then set up kind of the real picks and shovels trade, which is actually selling kind of picks and shovels for a real gold rush.
Oh,
And
Julian for the win. Go for it, man. Go for it.
yeah, and for copper and etc. and the copper mines and so on. And there's two parts of that. One, and I'll do this very briefly because we're mainly on AI.
Sure.
But if we're in a serious downturn, they're going to be cutting rates. They're probably going to be moving to yield curve control like Japan did. They might be following the Mirren doctrine of trying to stop capital inflows and start capital outflows, which could debase the dollar quite substantially. All of that creates a huge amount of liquidity into the offshore dollar system. And when you have liquidity there, they lend to commodities, they lend to trade, they lend to emerging markets, and those guys start to outperform. And we're at a point where inventories along supply chains are incredibly low. And that means that any delta on the upside can cause outsized demand increases into resources which have been deeply underinvested in as everyone's chased AI for the last 15 years. The setup's great, and the setup also applies to key emerging markets like India, which are just on the cusp of seeing a huge increase in their middle class. So people who can start to live in houses with running water and electricity.
Julian, so you're seeing the ball very clearly, it seems to me. And you and I have been around long enough to the Mr. Market's a very humbling master.
Yeah.
And we've all made more than our fair share of mistakes. The question I want to ask you is not what is your view, what's your conviction, what's your belief, but on a scale of 1 to 10, how convicted are you in this view? In other words, many you only can play the card. What's the saying? You got to trade the market that you're dealt,
Yeah.
not the one you want, right?
Yeah.
So sometimes it's like betwixt and between.
Sure.
There's nothing compelling. Dispersion isn't that great. Da 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 da. But every once in a while, we get to one of these massive inflection points. All right, Mr. Market goes crazy. Okay, and we've seen it just in our careers. I think back to the dot-com bust. I think back to 2008. I think back to 2021. I think back to Japan in '89. I was running the Fidelity Overseas Fund back now. It just feels in my bones that we're at one of those right now. And so my question to you is your view, your conviction around your view. It seems like this is one of these delicious times, doesn't come along every day of the week, where there's a real big fat pitch to hit here.
Look, I think this one is potentially a career-defining turning point in asset markets, away from kind of big tech and AI and into resources and select emerging markets. how to define a conviction depends on what kind of investor you are. So if I put a hat on that I'm a family office, I would say with a 10 that you should be moving out of AI stocks into resources and emerging markets because it doesn't matter so much when you're dealing with generational money, what happens in the next 6 months, as long as you get the 10, 20 years right. And the 10, 20 years, I think that's going to be the trade. Now, my conviction sort of in immediate returns sort of comes down a bit when you get towards, say, a pod shop that has to make money every month or every 3 months or
Yeah, hold on, hold on. I'm going to define it as 2026 the year. Forget about.
yeah,
Listen, the people who are hanging on to every word want to know what to do today, this week. Forget about that. I don't care about them. I have no
sure.
sympathy for them. You and I both know it's all gambling, all right? But if you were in a serious place, like you come to visit me at Fidelity or a serious hedge fund,
Yeah,
and
yeah.
it takes away and move around and say, okay, so we got 11 months to go here, okay? So we're going to give you a mark to market on these 31. Talk about your view for the year.
Yeah, so this is my view for the year. So what I think we look, I think we muddle through in the first half. You've got this sort of positive for US growth from the fiscal blowout. You've got a positive from the data center build. You maybe have a little bit of a positive from the Nvidia wealth effect, although if you made your money in Bitcoin, you maybe not so positive. And then you've got this squeeze on cyclical sectors from the high rates. Now in the second half, that fiscal impulse is going to be rolling off and reversing. I think the data center bloom, the bloom will be coming off the rose by then, and things will be starting to turn down. The wealth effect would go with it, and you won't have had enough time to get the rate sensitive sectors back up and running. That looks, as we go into the midterms, I think that looks really difficult. And so I think they're going to be, especially with the populist zeitgeist that exists at the moment, and the K-shaped economy broadening from blue collar workers to white collar workers as well. I think there's going to be huge pressure on the administration, including the Fed, to get up and reflate this thing hard. And when that happens, you're going to have a complete flip in markets.
And Julian is I think Jim Cramer famously said a few years ago, Apple, don't trade it, own it. I look at your miners, the mining stocks and gold and stuff. Don't trade them, just own them.
Just own them. Yeah, yeah, yeah. And
Yeah,
probably India and mining stocks and energy
yeah.
stocks as
All
well.
right, and last
Just own.
questions I'll ask you. Uh, I think you and I both don't like bonds. Talk about bonds for a second, and also, what do you think about Bitcoin?
Okay, so on the bond side, I don't know. Yeah, bonds are difficult because if you're committing to large and persistent deficits, that's clearly a negative. Now, we've had a deterioration in the labor market, but bond yields are much higher than they used to be for the last 30 years in that environment. So you're not just getting hit by the populist move towards big deficits in the States, you're then getting hit by the post-Swift kind of move out of treasuries by China. But then you've got another problem, which is that the three big sort of budget balance of payments surplus countries, who are the big buyers of treasuries, Europe, Japan, and China again, are all in demographic collapse. So yeah, they're going to have more pensioners who are going to be spending, not saving, smaller balance payments kind of surpluses, smaller capital account deficits, so less money going into treasuries. So your only time where you may want to buy bonds is in a Japan-like situation where the you're going into a downturn at the same time as they're planning financial repression, i.e., massive buying of the long end in order to keep yields compressed. That'd be the only time, but you've got to be careful. And yeah, if you're doing it as an overseas investor, you might lose just as much money, probably more money on the dollar than you're going to gain on
Yeah,
the.
Julian, one thing on the bonds I like to do, I keep pointing to people, it's a pet peeve of mine. One's measuring the bond U.S. Treasury prices are usually denominated in American pesos. And so,
Yeah,
if I were to put up a chart of the U.S. bond market in Turkish lira, it looks fantastic.
yeah, yeah,
But then you put up a chart of the U.S. bond market denominated in gold. It's
yeah,
an
and
outright disaster. I think investors are
yeah,
suffering
yeah,
from money illusion. So
yeah,
let's put it this way: in real terms, the bond market's a disaster. Whether it goes down in nominal terms, who knows? And the last thing, what do you say about crypto? Because like, if you had told me a year ago, tech's going to go to the moon, gold's going to double, silver's going to
yeah.
quadruple, and then hey George, $50 in double jeopardy, what's Bitcoin going to do? somehow it didn't quite work out the way they promised me. So, like, what's your take on Bitcoin?
Yeah. Well, the interesting thing was that on the gold side, the reason that's been running is a twofold process, whereby the Chinese government has been diversifying out of treasuries and into gold and other similar
Hmm.
strategic assets. But then the domestic population has been switching from buying houses and investment or kind of infrastructure bonds, which are now in heavy deflation, which we've been talking about for years. And they're buying gold because that's the only game in town. But they're not buying Bitcoin, and that's been left behind, and that's kind of suffering a little bit from, I think, Bitcoin was early in 2021 in seeing the problems were about to emerge
Hmm.
with tighter money in 22. I think it's been early again in seeing the problems that are going to emerge for broader risk assets later this year. Um, Ultimately, though, I think we've had a fair fall. I don't think they have any fair value at all, but I don't need to be short them once the Fed is in full reflation mode.
Sure.
I'd much rather be long of
Right.
resources
So
than
yeah, so
short.
I've always said to people, I know you know this line, can't remember who coined it. There's your beliefs and there's your portfolio. Just because you and I don't like Bitcoin doesn't
Yeah,
mean you have to be short it. There are much better, more interesting things to do. I'd much rather own gold rather than Bitcoin. All right, listen, this is Julian. We need to do this again. But before we sign off, could you just talk a little bit about what do you do, your firm, where can people find you?
yeah, sure thing. So we're the Global Macro Strategy Partnership. There's three kind of writing partners, and basically what we do is we're all very independent. We allow ourselves to be kind of almost independent from each other. We're all too old and grumpy to work in the same office, so we all have a separate office, and we write independent macro. I tend to focus on global capital flows, AI, etc. James focuses on the banks and the bond markets. Andy focuses on energy and productivity, for instance. But we all write independent work, maybe a couple of notes a month each. I do videos often with on the back of my notes. And you can find us here. Just if you're interested in a trial and getting to know our work better, do just email me on that, and we'll on Julian at MacroStrategy.
That's great. And Julie, if you pass me the deck, if anyone contacts me directly,
Yeah,
this will go up on our Substack. It'll be on the other channels as well, Apple, Spotify, YouTube, all the rest. If they contact me, I'll be happy to pass along the deck. So,
okay.
Julian, I can't thank you enough. This has just been unbelievable, and it runs so contrary to the narrative that you're hearing in the mainstream media these days. And there's no point. I mean, being a contrarian is it's kind of stupid. I mean, being a contrarian, just a wise guy, like
Yeah,
that makes no sense. But being a skeptic, being a cynic, that I have a lot of time for. You and I both have a lot of time for that. And we're not the fun guys at the party, but equally, when the cops are about to show up, we're not the
yeah,
guys that are
yeah.
going. We know when to get out, and do you want to leave early, or do you want to be the guy when the cops show up, you get busted? All right. So I think we're
Yeah.
warning folks that the cops are about to show up at some point. They'll be on premises in 2026 at some point. They may already
They will.
be here in plain clothes. We don't really know, but I couldn't agree with you more. I think, as you say, it's a career defining trade, and appreciate your candor, your wit, your incisive view of things. And we're going to definitely do this again, Julian. So I want to thank you so much. This
Yeah.
has been fantastic.
Great talking to you, George.